Hello and welcome. You're watching Countdown on Bloomberg Queen Live, India's first digital live streaming business news service. I am Kale, and here are the headlines that we are tracking at this hour. It's a subdued start to trade in the Nifty in the new year, with the Nifty trades in a narrow range around 10,800. Most sectoral indices trade with moderate cuts. And the worst sectoral performer in 2018, the Nifty Realty Index has begun 2019 with a bang. It's the top sectoral gainer in trade today. Maruti's December auto sales fell for the second straight month. The numbers were also the lowest in 2018. Mahindra and Mahindra's numbers too were below estimates, led by subpar tractor sales. M&M also is the top loser on the Nifty. And aviation stocks are gaining in today's day of trade after the government announced a 14% cut in aviation fuel prices. It's the steepest cut since November of 2008.
Okay, let's see what the market is doing at this point of time. First, pull up the Nifty. The Nifty has managed to be down throughout the day. Not a single session of traction. We're not at the lowest point of the day. Nevertheless, we're down by almost 0.3%. Similar is the case with the Sensex, and similar is the case with the Nifty Bank. So there is negative traction that's happening. The Sensex down 130 points, and the Nifty Bank is down almost 90 points at this point of time. A little bit of recovery is something that the market is attempting, but nevertheless, it's a futile effort at this point of time. Let's see what the broader markets are doing. Let's see what the mid-cap and the small-cap end of the market are doing, and we can see the traction. The mid-cap end of the market is flat in trade, but nevertheless, the small cap end of the market has managed to move into the green. Let's pull up which of the stocks which contributed the Nifty heat map. As far as the Nifty is concerned, only a handful of stocks in the gaining side. You have the banking space, Yes Bank and Axis Bank, both of them gaining. Sun Pharma is up in trade. The pharma pack, the banking pack is up in trade. TCS, Tata Motors, all of them are up in trade. M&M came out with a disappointing set of auto sales number. It's the top loser on the Nifty, 3.5% down. Metals again is seeing selling pressure today. You have Hindalco, you have JSW Steel, Tata Steel, all of them down in trade. Remember, they were the top gainers in trade yesterday, but nevertheless, the cuts aren't as wide as what's anticipated. We're down by almost 0.3%. If we can also pull up the contributors, what's happened as far as the Nifty is concerned, and we can see what is leading to the downfall. Basically, we're down 37 points. Over the past few days, Reliance hasn't contributed, even though HDFC is leading strength. Reliance is contributing negatively, M&M is contributing negatively, and IndusInd Bank is contributing negatively at this point of time. Let's also take a look at some of the movement that's happened on the mid-cap end of the market. You have counters like Vakrangi, which is up almost 5%. Prestige Estates has managed to move up in trade, but what is not doing well are counters like Page Industries, JSPL. SRF is seeing huge shots on high open interest build-up, so Agam will address that. NBCC has gained almost 10% in the last 2-3 trading sessions, so profit booking is seen there. And Dewan Housing Finance is down in trade. So the NBFC rally, which lasted for a few days, is seeing a little bit of selling pressure. So that's the mid-cap end of the market. So there is negative traction that's seen in some of the counters, but overall the index is flat in trade. But Agam, what are you spotting on the FNO side?
After seeing 2 days of gains, Darshan, in the new series, we're starting to see some amount of weakness, considering the Nifty and the Bank Nifty are both declining in trade right now. Let's pull up the Nifty futures, see what kind of a traction there is, and there is actually very little, considering open interest has hardly changed at all. And the Nifty banking futures, again, let's pull that up as well, and that's where we are seeing a little bit of an increase in open interest building up. But at this point in time, as we were expecting, well, there is very little institutional participation in the markets and cash markets as well as the futures markets, and we aren't seeing too much traction. The VIX also has advanced by around 1%, just cementing its place above the mark of 16. But this is not out of the ordinary. We have seen an expansion in option premiums over the past couple of days. Speaking of option premiums and options in general, the range we're expecting to see is currently now a 500-point range within which you can expect the Nifty to move. That is the 10,500 on the lower end and 11,000 on the higher end, because when you can consider the change in open interest picture, it is the 11,000 call which has seen an increase in open interest and is also the most active option, as you can see on your screen, in today's day of trade. That said, let's take a look at some of your most active stock futures. And as Darshan was mentioning, SRF is right at the top of that list. It's up 15% when it comes to its open interest. However, its underlying is down by around 2%, so shorts there. Besides SRF, we also have a lot of traction in something like a BEML, where you once again you do have shorts building in, considering an open interest surge of around 8%. Bank of Baroda is the other one which is in focus, but this one is on the gaining end. Again, 8% added towards fresh longs, considering the spot is advancing and trending higher by 3%. And Colgate Palmolive, another one of those losers. So, well, and about 5.5% added towards fresh shorts, considering its spot is trending lower by around 2%. But mixed cues overall, Darshan, not much to speak for.
Yeah, it's been a weak first session of the new year. Let's begin the market with a market voice. Ajay Bagga, Executive Chairman of OPC Asset Solution, is joining us on the show. Good afternoon, Ajay. Hi, this is Darshan here, and joining me on the show is Agam. Happy New Year to you. What are you starting to recommend your clients? What should they do in the new calendar year?
Yeah, very happy New Year to you, Darshan, Agam, and to everybody at Bloomberg Quint. Overall, today, don't take it as a trend-setting day at all. It's a holiday day. Unfortunately, Indian markets are kept open, and we face this issue every year. With the low volumes, there are sharp moves. So today, we have to just discount it out. There's no counterparty sitting on the other side to rationalize the moves. Overall, first half of the year is going to be more having a political overhang. So right now what we are recommending is sit on some amount of cash. Second is go for quality and the large caps. Don't try to dip into small caps. Definitely those could be more violent moves. And third is there is a strong probability of either of the national parties forming a stable government, and so we think the market would bottom out between March, April sometime when the politics will be in a real frenzy, and that could be a good time to buy into the dips. Lot of global risk, but we think most of those risks are overdone, and we'll not really see fruition of all the perils that are overhanging the world right now. So still remains a buy on dips, but right now might be smarter to sit on cash and build up some more cash, apart from the monthly SIPs that investors are doing. Fresh allocations, I don't think right now is the good time. We can wait it out. You might get lower prices in the next couple of months.
Right, Ajay. So from what I understand is that you're saying irrespective of whichever national party comes into power, what really matters is they come in with a majority. Based on that, and let's work with that assumption, what kind of themes are you playing for? Now, once again, I also understand that you suggest that you want to go in for your larger cap names, which have proved their stability over the previous, well, I would say even years and years for that matter. But if there are themes in the markets right now, how would you go about venturing in? Because there is a whole lot of valuation out there, and of course, India is considered to be one of the more expensive ones. So where are you finding value?
Yeah, on the valuation theme, it's not anything new. Right since India opened up to FIIs, we have been told that India is overvalued. We have historically had a premium valuation. Earlier it used to be because our ROEs were much higher. The ROEs also normalized. They're not that much higher than the rest of the world now because of the stalled projects and the lack of productivity on incremental capital. So we lost out on that. But what is helping us out is the growth. So even now it is a 7% real growth economy, and we are expecting 20% plus earnings growth in 2018-19 for 2019-20. for the Indian markets, and the market will discount that sooner or later. It would have been a much better performance this year, looking at the next year revival in earnings that nearly is the consensus. Why it has not happened is more because of the politics. So we've had our fair share of withdrawal of FII money. That's the global part. Despite that, we have been an outperforming market vis-a-vis the rest of the world. I mean, imagine China versus India. We are a 30% outperformance. Why is that happening? That's the domestic money which has been coming in, which has given a good leg to this market to stand on. And that will only accelerate from here on, because those are mega trends: the financialization, formalization, the demographics, and the savings by that demographics getting converted into investments. That's not a single year trend, that's a decadal trend, and that will really take off. That's equal to 1981, when Ronald Reagan started the 401k, the pension plans in the US. The entire US mutual fund industry was $60 billion. Today it is north of about 16 trillion, and a lot of that is 401k and equity ownership increasing because of those pension plans. We are seeing that kind of a mega trend in India that will sustain the markets. Having said that, what do you look at? I think banks still remain our focus. They'll do pretty well within banks, private sector, corporate banks. That's a turnaround story. Private sector, retail focused banks will continue to do well. I think those two are themes that stick out. Trading, you could look at PSU banks. I don't think as an investment thesis right now you have too much, but you could have trading bounces from time to time. The second big theme will be consumption. There you have to be a little choosy. FMCG is not liked by most foreign brokerages, by fund managers, because of valuations, but the amount of liquidity that's going to come into the market, be it farm loan waivers, be it more money in the rural economy, be it the salary pay commission based salary increases and arrears being paid out. All that will translate into higher consumption. So FMCG, the staple side, and then the durables, I think those will do well. Cement is a turnaround sector.
Ajay, go ahead. You're saying cement.
Cement, we are expecting to.
What are the sectors?
Cement, we are expecting to do well. Again,
what's something that you would avoid in this market? Because most of the stocks and most of the sectors have come off. For investors, sometimes they will just take bets across sectors. Which are the sectors that they should stay away from?
See, I'm not convinced about telecom. You do see these re-rating calls from time to time. Aviation, another one, despite the fuel cut, what you were talking about earlier in the program. Aviation is seeing volumes, but it is not seeing margins. There was that Moody's report which said ticket prices in aviation have to be about 15% higher, even for break-even. So, industries which are seeing huge growth, that's okay for startup when there is PE kind of money, which is, but in public markets, these kind of stories have not really lasted, because what are we doing? We do a discounted cash flow of future earnings. So you need to have positive cash flows for us to give any valuations. Right now you're doing on just on hope and some infusion of cash hopefully in the future. So I would stay away from that. Aviation, telecom, capital goods, I'm still not convinced. We've had these false springs a number of times in the last 4 years that, there's a revival. Infra has revived, but those are very difficult plays. Those are very political plays to really go into the road builders. I would stay away from them. And they're not that high return on equity also. So these will be a few of the no-go sectors for me, though a lot of people are turning bullish on infra cap goods. I would say you're better off playing something like cement. And then metals, again, I'm not very convinced. Metals will really depend. If you get a big Chinese stimulus coming by, metals will really rocket up. that could be the time to get into metals. You won't lose the bus, you won't miss the bus. Otherwise, metals, I think right now, at least for next year, because you're not getting the Indian pricing for it, you're getting a global pricing, and the global economy is slowing down. So that's a sector which is very strongly correlated with the globe and extremely strongly correlated with China. So unless there's a big stimulus from China, metals might really struggle. So
okay,
those could be aviation, telecom, metals, infrastructure.
Right. Ajay, we got that. I just wanted to come in on the global point that you were making right now. December has clearly seen Indian markets shrug off the volatility that we saw, especially in markets such as the United States. My question then is, do you think that we can see a continuation of that as we move into perhaps the first few months of 2019 as well? Do you think that Indian markets will move on their own accord and will not have, and the global markets may not have as much of an influence on Indian markets perhaps in the first 3 to 4 months of this year?
We would wish for that, but I'm not very sure. What is the basis? $600 billion is the annual withdrawal rate by the Fed. $50 billion of quantitative tightening is happening month after month now. Now, what will be a trigger is if Jerome Powell comes by and says, okay, balance sheet reduction we are putting on a hold for now. That will be positive for emerging markets, also for India. Second, right now the Fed is talking about 2 rate hikes. I think after one, they will have to stop because of the slowdown that's coming by. Just look at the US earnings. They grew at 27% this year. We are expecting a 6% growth next year because of the base effect, because the tax stimulus going away, getting absorbed, and the fiscal deficit already running at about $1 trillion. So all those are very huge issues on the global markets. We think markets will still run for about 12 months globally. We are not really into a recession, though we saw a contraction in the third quarter when 5 major economies, Italy, Germany, Japan, Switzerland, Sweden, all 5 went into correction mode in third quarter. Fourth quarter, they are expected to bounce off. So the recession fear is off. But look at the slowing China, look at slowing Europe, look at slowing Japan. You have some trouble cooking up, and in that you are taking out liquidity, which is basically oxygen for the capital markets. If you start calibrating the liquidity, you get some trouble. So I don't expect huge amounts of inflows into India for the next quarter or the next 2 quarters, given the political risk which is looming. Post that, there would be a lot of pent-up demand, and so long as the global issues have got digested. And big trigger there will be the Fed coming out with some kind of slowdown in its balance sheet reduction. I think that will be very critical for global markets.
Okay. Ajay, many thanks. We'll leave it at that. Thank you so much for joining us and sharing your perspective on Bloomberg Quint, and once again, Happy New Year. Okay, let's shift our focus to the auto sector. Maruti Suzuki reported December sales number that fell for the second straight month. In fact, they were the lowest level since 2018. However, it's not only Maruti. Almost all the auto pack is likely to report a subdued number owing to a delayed festive season, among other headwinds. Let's get in a dealer perspective that's coming in. Who joined Ashish Kale, the president of Federation of the Automobile Dealers Association, joins us. Good afternoon, Ashish. Happy New Year to you firstly. The December numbers are rather weak. If you look at Maruti also, 4-month low numbers. If you're looking at Mahindra, the tractor sales are hardly growing. But whatever's come out, not been very impressive. How have you viewed the December sales that have come out, and do you see a pickup coming in over the next 2 months, either on the passenger side, on the commercial side, or even on any or on the heavy vehicle side? So what are you seeing exactly?
So good afternoon and Happy New Year to you and all the viewers. December, the sales have actually in the first 15 days were not as good as we expected, but the last 15 days have I think the sales have picked up across all the segments. And although it's too early for us to report any numbers, I have seen the wholesale figures of Maruti, but for us to report any retail figures will take some time. But the initial feedback that we are getting from all the members is that December has been as per expectation, and it's been good in the last 15 days.
Okay, so Ashish, if you can, come in and tell us about what we can expect from January and February, and to a certain extent, we also have the element of the fact that a lot of these customers will prefer newer registry vehicles, that is vehicles registered in the new year. To what extent can that play out in January, February? And secondly, your overall outlook of how you're getting or you're feeling out the on-ground traction. What do you make of all these factors here?
If you look at the festive season that we had reported, it was not as per expectation at all. In fact, it was one of the worst festive seasons. So our hopes as dealers were on December, and I'm happy to say that all the OEMs have also supported us by reducing or marginalizing the billing so that stock can be reduced. The stock build-up towards November end or opening December was quite heavy. December, as I said, first 15 days was did not move as per expectation, but last 15 days we've seen very good traction come back to the market. We've seen some talk in the press about liquidity being eased. And there is a positive sentiment which is returning back. That was seen in the last week. As you said, there are customers who wait for the newer registration, that is of the new year. But there are also customers who wait for a good deal for December. So if you look at it, the last 15 days of December and the first 15 days of January is actually quite a good time for us because those customers who are looking for a good deal, we have closed in December. And we still have a good overhang of bookings for people who want to go in for a newer model of 2019.
However, the discounts panned out in December, and can we anticipate them to continue or have more discounts over the next 2 months?
So I think December had probably one of the best schemes for the customers. To tell you, even I went in for a vehicle purchase for my wife. So, but I don't foresee the discounts continuing that way. It was, as I told you, there was a huge inventory build-up since the festive season was not as expected. So the OEMs and the dealers got together and there was a very good package which was offered to the customer so that we could come back to the growth phase that was happening before September or up to September, and also to clear a lot of the inventory. And I think I don't know the clear numbers today, but if the indication that we get from our members is that it's been a good December, at least the last 15 days. We'll actually come to know how it pans out in terms of percentage once we come out with the retail numbers by about 8th or 9th of January.
So in that case, Ashish, if you could give us, a ballpark number of sorts when it comes to inventory levels, and I'm sure, and you've already spoken about you'd want to wait for a few more days before you get the exact number, but how are inventory levels panning out? And I know that you have made a cursory mention, but if you could elaborate on that point about things then the way they stand in the month of January.
So in the opening December, as I told you, inventory levels were high across the segments, especially in passenger cars and two-wheelers. Not so much in commercial vehicles. It was high, but not of a level of concern. But two-wheelers and passenger cars was very, very high. And this is not the usual inventory level that we carry at all, especially post the season, which is when the inventory actually goes down. In terms of number of days, what we started with passenger vehicles was about between 50 to 55 days of inventory. Average inventory level is about 1 month, which is 30 days. In two-wheelers, it was a bit higher, up to 2 months of inventory was there. Again, average inventory level is about 30 or 35 days in that due to the variance. I'm really not sure how the inventory level looks at the start of January in number of days, but all I can tell you is we are getting a positive feedback from all our members that the last 15 days retail has been good, customer inflow into the showrooms has been good, there seems to be some confidence come back to the NBFCs. So I am hoping that this, and as I told you that even the OEMs have been very supportive and have been concerned of the inventory levels. Probably their wholesale numbers might not look very good in December. I don't know. It's just an assumption. But I think the inventory level definitely has come down in December end. To what level we'll know in the first by about 7th or 8th when we come out with the retail numbers, and of course when SIAM also comes out with their wholesale numbers.
Ashish, just a follow-up question on commercial vehicles, and again, a lot of analysts out there are suggesting perhaps that when it comes to commercial vehicles, there's a slowdown at this point in time, but we're also looking at the election year, and this is where a lot of analysts start pegging for a return in volumes for commercial vehicles specifically. Can you tell us about how you are seeing things on ground with respect to traction in commercial vehicles?
So in commercial vehicles, there has been a dip in demand definitely, especially in the cargo segment. If you look at the axle weight notification which came out, I think post that now transporters are actually calculating the fleet size, and therefore there is a pause in demand right now. I don't know whether this will actually translate into a pause in demand for a longer term. With regards to the elections and projects going on, infrastructure is still a big story. Roads and highways are still being made. So tipper demand, I don't think has dropped substantially, the construction tipper that is there. In terms of the medium range vehicle, in fact, the demand has not gone down. We see strong demand there, and we see that strong demand continuing. E-commerce is growing, goods movement is growing, so I don't see a dip in demand there. But for cargo vehicles, yes, and we'll have to wait another month or two to actually see how the transporters have recalibrated their fleet size based on the new axle weight ratios, and then we'll probably get a clearer picture. But I don't see a dip in demand happening in tippers and medium vehicles. Cargo, yes. Overall demand in the construction vehicle, in the commercial vehicles, because of that, has gone down. But it's still in a growth phase. It's not gone into a degrowth phase. It was growing at a very, very healthy rate of around 30% till October. November, we've seen some dip in demand. December figures, as I told you, once they come out, we'll have a clearer picture on how things are.
Ashish, before we end the interview, a final word. What are the auto companies doing in this period to support dealership, especially in terms of billing? That's the segment that we want to talk about.
So two major things, as I mentioned, there was a general consensus that stock has gone up, which is a good thing for all of us, because stock going up is not healthy for the dealers' finances. And so we've seen a reasonable moderation in billing numbers in terms of December from whatever feedback we get from the members. And because of the stock being high, as I told you, the schemes in December were one of the best. And that's also one of the reasons that we've seen customers coming back. I think being into a growth phase till around September, these 2.5 months that we faced a degrowth is a concern for the entire auto industry, for the OEMs and for the dealers. December saw both of us coming together and getting some good retail numbers. I hope and I'm sure that in January, February and March, this will continue. I expect growth to come back definitely, because one of the key factors was the liquidity, which had gone down, and because of which sentiment had gone down. But the inquiry of the customer was still going on. So that gave us hope, and we are very happy to say that the last 15 days of December have proved that the interest of the customer is still alive. There were other factors which were probably more negative than the positives. We hope most of these factors are now going away. We expect this quarter to be much better in terms of retails.
As will the market participants, Ashish. We'll leave it at that. Thank you so much for joining us and taking us through what your reading is off the ground when it comes to, the automotive segment in general, and of course from a dealership point of view. That said, we'll move on and shift focus back into the Indian markets. And we have Sacchitanand Uttekar of Tradebulls Securities, who's now joining us on the show. Sacchitanand, good afternoon. Thank you so much for taking the time out, and a happy new year to you as well. How do we stand when it comes to the benchmark indices now, and what would your approach be?
Well, good afternoon, and wishing all the viewers of Bloomberg Quint a happy and a prosperous new year on behalf of the Tradebulls family. So if you look at the stance on the index, we have been maintaining a long bias and we continue to do so. If you look at the previous expiry, we saw a lot of volatility in the December series, and the way we have commenced this particular series, there's a quite good chance that the hurdle of around 11,000 would be breached, and we expect that the market should scale higher towards 11,140 levels or so in this particular next couple of weeks itself. So overall, I think the markets are in a trending mode, and I think the trend is very well established on the bullish side. So we may see some bouts of consolidation here, but overall, I think the trajectory remains on the higher side, and we are expecting that the base has been established somewhere close to 10,650 now, and markets should scale higher towards 11,140 in the early part of the series itself.
Okay, firstly, before we head to the other technical analysts, take a look at the markets. The Nifty is almost into the green. It's been aided by recovery on some of the Nifty counters. HDFC has now moved to the highest point of the day, has a large weight on the Nifty and the Bank Nifty, and that's why you could see the markets moving up. Infosys is contributing and HDFC Bank is contributing. So all these counters have moved to the highest point of the day. Infosys has moved to the highest point of the day, and Kale has moved to the highest point of the day. So basically, the HDFC twins, Axis Bank and Infosys, them moving to the highest point of the day has aided the Nifty coming into the green at this point of time. So there is enough traction that's happening on the markets. Some of the stocks that I want to focus in trade, Autoline Industries, pull that up. That's up 15% currently. The other counter that I want to highlight is Autoline Industries is 15%. Quest Corp is the other counter which has moved to the highest point of the day, is up almost 6%. Among the private sector banks, Karur Vysya Bank is doing well in today's trade. So that is doing well, and the traction continues in some of the frontline counters, which is doing well in trade. So there is traction that's happening on the Nifty. We are well off the lows of the day and now firmly into the green for the Nifty as well as Bank Nifty. The Bank Nifty, in fact, is up 80 points as we speak. So a sudden surge coming in as far as our markets are concerned. Let's get in Amar Singh of Angel Broking joining us on the show. Amar, a good recovery on the Nifty. We've moved above the 10,850 level. What are you recommending clients on the Nifty?
Yeah, actually, we had a buy call in Nifty this morning, and it was a buy in the Nifty call option 11,100 strike. So we did see that there could be a possibility of a bounce back. But overall, if you look at the charts on a daily basis, we are seeing one of the indicators are clearly pointing that it is a sideways market for the moment. And Nifty will continue to trade range bound till we don't see Nifty decisively trading above 10,950, 11,000 mark, because it's roughly, you can say, from the current levels it's 100 points up, 130 points. So that's a very crucial zone of resistance. But if I look at the long-term charts on the weekly as well as the further long-term charts, it shows that there is a possibility that we could see those levels getting breached. But we'll have to wait for that. And on the downside, however, Nifty has now found a good support coming at around 10,700, 720. Earlier, the support level was around 10,550, so that's moved up. So that really shows that it is inching higher. And as far as Bank Nifty is concerned, I would say that Bank Nifty again is comparatively stronger. If you look at the recovery that has happened today again, Bank Nifty, that's comparatively stronger. So I would say that Bank Nifty, on the upside, it's very close to its crucial resistance zone of 27,400, 450. It's hardly 70, 80 points from that level. And the bounce back has been sharp. So I would say that the Bank Nifty is the one that could really lead the rally. So we'll have to watch out for that. On the downside, 26,700, that's a level of support for Bank Nifty.
Okay, so Amar, when you consider that for the time being, at least, you're expecting the Nifty to be range bound before it actually breaches some crucial levels that you've spoken about, would you recommend selling a higher level call and simultaneously also selling a lower level put, thereby selling a strangle in general?
I would say that I would rather wait for the level, because if Nifty, because what's happening in Nifty is that we are seeing Nifty trying to retest its key resistance zone. So if there is, and that's going to be the third resistance zone, because if we look at Nifty, what we saw on 3rd of I would say December, where it had made a high of 10,940, and then again 19 December 980, 85 or so. So it is trying to, so if we see a retest around those levels and it doesn't, I would say, breach those levels, then it could be a good idea to go for a short strangle. Otherwise, I would say that there could be a trend change, significant trend change. So one should be slightly, I would say, cautious around these levels. So one should watch out if it's a failed, if it fails to surpass and sustain above the level, then yes, that could make more sense.
What stocks are you recommending for today, Amar?
I would say I have two stocks. One is BPCL. What we're seeing in BPCL is that BPCL continues to trade positive on the daily as well as the weekly charts, and long-term charts also. It is in oversold territories. It has moved up, and technically I would say that it has a potential to rally. And the levels are also I would say around 360. That could be a good level to buy with a stop loss of 347 and a target of 384 on the upside. And the second is also from the oil and gas pack, that's IGL, Indraprasth Gas. This is one stock, if you look at it, it's very strong on the short term as well as the intermediate term trend. And today also the stock has witnessed a recent rally. And it has, if you look at the stock has breached its key consolidation zone somewhere around 268, 270. That was a crucial zone of resistance for the stock. The stock has taken that out and continues to remain strong on the chart. So I would say that this is another stock one can look at. So any pullback towards, I would say, 268, 270, ideally that can be a good good level to buy with a stop loss of 256 and a target of 289 on the upside.
Okay, well, fair enough. And you know, in general, we do get a lot of queries in something like a Yes Bank too. So I'm going to go to Sacchitanand because that's one of his calls as well. Sacchitanand, if you could take us through the 3 calls of the day that you have for us.
Well, since we are talking about Yes Bank, this is one stock which has been on our radar in the since last couple of trading sessions. If you look at the broader structure, what we are seeing here is that the pattern itself is suggesting that the down move that we have seen so far has been terminated. If you look at the formation itself, it's a falling wedge pattern which usually occurs in the end of the rally, and I think that particular pattern has been activated. We have seen a decent consolidation, and the stock is maintaining its tail well above the 180 mark. So probably even from a momentum perspective, this particular stock looks very lucrative. A stop loss can be placed at around 179, and momentum trades can be initiated for a target of around 196. Overall, we are expecting that during this particular series itself, we may see levels close to around 210, according to the pattern. So positional as well as momentum basis, this particular stock can be considered. The second call is a buy call on Exide Industries, where we have seen that 3 months of consolidation, or probably what we are observing here is a rounding bottom formation getting matured, and with that intention, the stop loss for the trade is around 264, and long positions can be deployed in Exide Industries. The pattern is indicating a target of around 278. The third call is purely on momentum basis. We have DLF, wherein we have seen a good amount of traction in today's session despite of the low volumes. If you look at the overall structure, the stock has been locked into a particular range. But we expect that this particular move can extend towards 190 levels, where its 200-day exponential moving average is placed. So purely from a momentum perspective, a stop loss can be placed at around 178, and longs can be deployed in DLF.
Okay, Sacchitanand, just hold on. We'll move on to the next guest. And ICICI Securities has come out with a list of stocks for the year 2019 that it wants you to bet on. Let's discuss some of those stocks with Pankaj Pandey, Head of Research at ICICI Direct, who is joining us on the show. Good afternoon, Pankaj. Happy New Year to you. What's the theme of the report before we get into the stocks? What's the main theme of the report in terms of the direction of the market and why you believe that there could be traction?
Hi, good afternoon, and wish you all and all the viewers a very happy new year. So what we sense for 2019 is that we are entering 2019 with one of the best macros. So you have inflation, which is substantially lower as the crude oil prices are also substantially lower. And then you look at the trade deficit, which is expected to be at its peak this year. I think next year it is going to decline because of the decline in crude oil prices. Then you have a prospect of a rate cut also, and then currency overall has sort of stabilized. So besides election-led anxiety, I think most of the domestic macros are absolutely fine. And our sense is that the markets will give more weightage to macros rather than the political anxiety. And if the domestic macros are good, then I think it is overall good for the entire economy and especially for the mid caps and the small caps. And which is why most of our recommendations are in the mid cap and the small cap space. So we expect a good run up in these stocks. Last year, if you look at, there's been a uptrend in crude oil prices, and then you had overall hike in interest rates and currency related issues, and which is what impacted the overall investor sentiment. So we see a reversal of that, and which is why we believe that the entire mid cap and small cap space should do well. Look at the broader markets, most 80% of the stocks are below their 200-day EMA. So I think that also speaks volume about the kind of overselling which has happened in the broader market. In terms of pick, we have recommended 7 stocks. So one of them is Apollo Hospitals, City Union Bank.
Pankaj, Pankaj, if I can interrupt you, I just had a follow-up question before we go to your picks. Your report mentions that you have an earnings CAGR of around 18%. That is through the period of FY 18 through 20. And please correct me if I'm wrong, because I have the graphics here according to that. That means that we are expecting a significant pickup in earnings in the upcoming year. Well, in that case, what are those factors that you are so convinced about, which could show that there will be earnings and these earnings will be much better in comparison to what we've seen in the previous couple of years?
Yes, so what we have put it in our report is that overall we are expecting about 18.5% CAGR growth in earnings, and with a 19 multiple. Our target for Nifty is about 12,100. Now, this 18.5% growth is would largely be anchored by banks, especially the corporate banks. To give you some example, if you look at in FY 18, the profit for something like Axis Bank had come down to about 276 odd crores, around about these figures. And what we expect is that in FY 20, their profit could be about 9,800 odd crores. Similarly, for State Bank of India, if you look at, they made a loss of about 6,500 odd crores, and we would expect them to make profit in excess of 13,000 odd crores. So that's a good amount of delta what you see over the next 2-3 years, largely anchored by corporate banks. Where we would see some softness is the metal and the oil and gas pack, because metals, if you look at, has overall, if you look at globally, since the outlook is not so rosy enough, so metal prices have corrected, and which is why metal as a segment may not really deliver in terms of earning growth. Same is the case with oil and gas. The upstream sector had done extremely well. But now what will happen is that both upstream as well as even downstream also does not look good because your GRMs have sort of corrected. So these are the segments which will underperform. But I think IT will keep chugging along in low to high, single high digit kind of a growth, or to low double digit growth. Then you have FMCG, and then where we also sense a good sense is that the capital goods and infra as a space should do well, given the fact that these two sectors are quite interest rate sensitive, and their earnings are also quite sensitive on the overall interest rate cycle. So from that perspective, I think these are the segments where, and also we expect a decent amount of growth rate to happen. But largely, bulk of this earnings is largely will be driven by the corporate banks.
Okay, Pankaj, let's nail it down to stocks. Some of the stocks that you like, we'll briefly go through some of them. Apollo Hospitals, what makes you bullish on Apollo Hospitals?
So Apollo Hospitals, if you look at, it's one of the best integrated models in the healthcare space. And now in the last few years, the company has aggressively expanded their capacity. So they have added about 1,400 odd beds, about 9,800, and their pharmacy segment has also been growing at exceptionally pace at about 28 odd %. But what it has done is that it has impacted their ROCE in this process. So their ROCE has actually come down from about 12.5% to about 6 odd %. So what the company is looking to do is that they're going to recalibrate in terms of their capital. So which is why they're going to marginalize capex. Then they're going to look at levers to improve the revenue. So they're looking at average length of stay, or then in maximizing or improving the revenue per operating bed. So I think all that factors should lead to improvement in ROAS for this company. And we have not seen much of a price performance from this stock, and which is why we believe that I think this stock should do well, given the fact that the company is now focusing on ROC, which according to us is the single most important factor to look at in any company.
And what about Astral Poly? Because we've been hearing some analysts who do suggest that Astral Poly perhaps just could be a tad bit expensive. So why do you like this one?
So Astral Poly is definitely expensive. It has done decently well this year. So in H1, if you look at the company has delivered revenue growth of 20%. Bottom line has been growing at about 30, or has grown at 30%. We expect these good set of numbers to continue. So for even for next 2 years, we expect that the top line growth could be about 23 odd percent. Bottom line could be about 26 odd percent. This stock is trading at about 35 times FY21 basis. But mind you, what we sense is that this is one of the best piping place which one can look at. So CPVC as a segment looks extremely attractive to us, and it's not that commoditized compared to the PVC as a segment. And we have seen margin improvement of about 200 bips. We expect further margin improvement. So the company has done well. We expect overall performance to sort of keep bettering themselves. So overall, I think good growth further ahead also will keep driving the stock. So which is why we like this stock.
Okay, there are two stocks which you speak about, Ramco Cements and Somani Ceramics. You've recommended that these two are the picks also. Give us the rationale, given the fact that, you know, that traction is not there, because both of them actually depend largely on, you know, the infra space, the housing space, but traction is not being seen at this point of time.
You're right. If you look at both the stocks are down in the last 1 year. So Somani is down about 60 odd percent, whereas Ramco is down about 20 odd percent. Now in case of Somani, if you look at the second largest tile manufacturer, have got a market share of about 6.5%. Now in the last 12 to 18 months, a lot of things have gone wrong for them, and which is why the stock has taken this kind of a beating. So their margins, if you look at from about 13.5% has come down to about 6.7 odd percent, so literally halved. That is because of a number of reasons. One, the Kerala floods. Kerala as a state contributes about 12 to 13% of their top line. Then there were some issues with gas pipeline also, which led to about 8-day production loss for them. Then you had transporter strikes, and in between, since the crude had rallied, which is why the gas prices has also gone up for the company. So all this combined had taken a toll on their overall performance. But what we sense is that some of these are sort of one-time. And in fact, what we would also sense is that since the crude has corrected, even the gas prices correction will follow. And as a result of that, the company should benefit from this overall trend. So the margins, which had declined to about 6.7 odd percent, should improve to 10 odd percent. And which is why the stock should recoup some of the losses or some of the decline which it has seen last year. And it's trading at about 40% discount to Kajaria. Usually the discount is about 15 odd percent with the market leader. So which is why we like this stock with a target price of 410. The other stock is Ramco Cement. Again, this stock also we would expect H2 to be far better, given the fact that there should be some rebound in cement volumes, especially in southern markets like Kerala and Tamil Nadu. Plus, they are expanding their capacity from 15.6 million tons to about 21 million tons. And they are the most efficient players. So of the overall tier 1 space, if you look at, they are quite efficient. And what we expect is that going forward, the overall revenue growth could be about 15 odd percent, largely led by volume growth about 14 odd percent. And there should be some margin expansion. So EBITDA per ton should improve from 1,080 to about 1,300 odd. And it's trading at decent valuations. And So I think within cement tier 1 names, I think this is one of the best stocks one can look at. I think all your commodity plays are all about efficiency, and this is one of the most efficient players.
Finally, Pankaj, then, if you could also tell us a little more about why you like Grindwell Norton.
So this company is in abrasives, and so of their overall top line, if you look at 60% is usually from the abrasives as a segment. And we sense that all the user industries, say for example steel, pharma, all these industries are doing well. And we expect that overall for this company the growth rate would be about 11 to 12%. And overall this company is a market leader with about 25% kind of a market share. And since the user industries are doing well, so we would expect a good run in these in this segment as well, and which is why this company, being a market leader, should be a beneficiary of that. And in addition to that, they are doing a capex of about 50 odd crores. So that should also lead to about 11 to 12% kind of a growth in top line. So which is why we like this stock, given the fact that the user industries are likely to do well. For us, the target price on this is 625.
Okay, Pankaj, many thanks for joining us on Bloomberg Quint and sharing your perspective and the topics for 2019 for ICICI Direct. So those were the topics that ICICI Direct has put out in a report. But as we speak, the market is headed toward the highest point of the day. HDFC has moved to the highest point of the day. Bajaj Finance has now moved into the green, so there is traction that's happening on the counter. ICICI Bank has contributed, and that's why look at the bank nifty, the way it has moved. HDFC Bank, HDFC, ICICI, three large weightages on the Nifty Bank and the Nifty, and there is enough traction that's happening at this point of time. Sacchitanand, any word on any of the banks that look good to you? The market has moved up 150 points, the bank nifty. Any bank you will buy at this point of time?
Well, as I discussed, we are liking Yes Bank. I think we discussed this particular trade. Apart from that, we have been bullish on the HDFC Twins, and HDFC Bank is something that we have been holding in our clients' portfolios. So, even at this level, I think HDFC Bank still looks lucrative. A stop loss can be placed around 21.20, and longs can still be initiated from a momentum perspective. What we're expecting is that the hurdle of around 21.60 could be tested very soon, and we are expecting that this particular move can extend towards say 22.25. So probably given a choice, apart from Yes Bank, HDFC Bank is something which still presents a very decent opportunity on the long side.
Okay, hold that thought, guys. We're going to address what's happening in aviation, because Indians seem to have made the most of the festive season to travel abroad, and the DGCA data released for the month of November saw the sharpest spike in foreign travel versus domestic passenger traffic growth. And we have Somit Sarkar, who's standing by to give us more perspective on the same. Somit, good afternoon.
Good afternoon, Agam. So if you see in the holiday month of November, Indian travelers have chosen to explore international destinations over domestic. Now, passenger growth rate on international routes has beaten the domestic passenger growth rate for the first time in the last 15 months. And if you see in the month of November, the passenger growth rate for domestic routes was close to 11%, while that of the international routes was close to 13%. And this difference between the international growth rate and domestic growth rate is the widest in the last 4 years. Now, why this is important? Because if you see in the month of November, domestic passenger growth rate was the lowest since August 2014. So a good growth rate in the front of international routes is a good sign for the aviation industry.
Somit, thank you for joining us and getting us that perspective there. But there is one stock that I want to mark at this point in time, and that is Quest Corp. In fact, we had my colleague Yash Upadhyay, who had addressed this stock early in the morning in Bloomberg Edge with an indication of a positive move based on back-tested data on one of the indicators out there. And as you can see, well, on your screen there, there is a bullish engulfing, and of course this is indicators thrown up by the Bloomberg terminal, not necessarily us. But based on that, we have seen that surge in Quest Corp, which came up particularly in the last 1 hour of trade odd. And of course, it's been doing well since. Sacchitanand, if I can pick this up with you as well. Questcorp really hasn't done very well over the last 3 or 4 odd months. However, things seems to have changed in the last perhaps 1 or 2 sessions. What's going on here, and how are you reading these cues? What would you do with Questcorp?
Well, definitely from here on, the bias would remain positive for the stock. In fact, we have seen a decent amount of bearish trend out here. But if you look at the overall data since November 2018, what we are seeing here is that the RSI has been quoting a positive divergence since then. And if you look at the price now, the price is affirming that particular direction. So what we are expecting is that this particular move can extend towards around say 770, 765 zone, and probably long positions can be deployed from here on. A stop loss for the trade should be placed somewhere close to around 640 on a closing basis, and this should be considered from a long bias trade now. I think the worst for the stock is over, and I think it should be a buying candidate rather than a shorting candidate.
Okay, fair enough. The other stock that I want to address is Colgate-Palmolive. Let's pick that up, pick that one up as well. And the thing about Colgate-Palmolive is that it has had a fantastic run over the last 2 to 3 odd months, but it's trending lower downwards, and that too by 2%. It's currently at around 1320, and we've seen some good traction in the futures and options space as well. Amar, how are you reading cues here on your charts? What's Colgate-Palmolive looking like to you, and what would you do with this one?
I would say that Colgate-Palmolive definitely continues to be extremely strong across different time frames. There's no doubt about it. But on the daily charts, what we are witnessing is that we are witnessing bearish divergence on the daily charts. So what it effectively means is that the stock is somewhere losing momentum. And the stock, if you look for the stock over the last almost a month or so, it has been trading sideways. It has taken some support around 1290 odd levels, and the upside again 1350, 1360. So the stock seems to be trading in a range, and on the downside I would say 1270 is a very crucial support for the stock, whereas on the upside 1350, 1360. But yes, any dip should be used as a buying opportunity, because the trend of the stock continues to remain extremely strong, as I said, across different time frames. So there could be a pause in this stock. However, the stock is trading in overbought territory across different time frames, so that means that one needs to be slightly cautious. So only dip should be bought, not at current levels.
Okay, hold on guys, time for a short break here on Countdown. On the other side, we'll get you the Fab 4 stocks of the day. At 3:15, we'll get you what dealing rooms are talking about some of the stocks, and some closing strategies from our technical expert. Do stay tuned to Bloomberg.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
so much left to do.
Who knows what life will bring?
The road is long.
The journey full of promise.
The pursuit
only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments. good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Countdown. 29 minutes left for the markets to close. Do remember the global indices are shut today, which means that's only us at this point in time. Well, not too much to speak for. Turnovers are low, and quite understandably considering the lack of participation from institutions. But we are, there you have it. Surprisingly, the turnovers are not as low as the previous trading session at 3 o'clock. In fact, it's inching towards 5 lakh crore mark, and well, the cash, of course, as on expected lines, much lower than 21,000. That's the average that we've been used to over the past couple of days. But on that note, let's bring in Yash Upadhyay, who is here with the list of Fab4 stocks of the day. Yash, good afternoon. What do you have for us?
Afternoon, Agam. I'll start with the automakers, and it was a disappointing month of December for most of these auto names, but one name that stands out for me is Atul Auto, and that one's locked in an upper circuit of 20% after the company reported a strong 50% growth in its December volumes. They did a sales of close to 4,300 units as against 2,900 units that they sold in the same month last year. GMC Projects is buzzing on the back of a big order win. It's up 4.5% at this point after the company said that it has received orders to the tune of almost 600 crore rupees for residential as well as commercial projects in the south of India. They say that most of these orders are from the existing clients and are repeat orders and would help them maintain their guidance in terms of revenue and margins for FY19. UCO Bank is up about 11.5% after the company said that the central government has announced an additional investment of close to 3,100 crore in the equity capital of the bank. And Dredging Corp has been rising for the last 5 trading sessions. It's up 6% today as well. And with that, in the last 5 trading sessions, it's rallied more than 35%, with volumes too coming in significantly higher, almost 15 times the 20-day average.
Okay, that's the Fab4 stocks of the day. Thank you so much for that, Yash. Some of the stocks that I want to highlight, look at Bharti Airtel, and it's moved to the highest point of the day. It's up almost 2.5%. HDFC has contributed. HDFC has moved up to the highest point of the day. Power Grid is another counter which has moved into the green at this point of time among the Nifty counters. Among the non-Nifty counters, some of the counters I want to highlight, Blue Dart Express has moved to the highest point of the day. You have AkzoNobel, which is doing well in today's trade and has surged off late. And Symphony has done well in trade, so that's doing well. What is not doing well? Narayan Drudale down another record low, 52-week low. That is down in trade. And Vinnati Organics, surprised to see this counter trade at the lowest point of the day. So that is where traction is happening on the lower end of the market. But Rajat Sharma, CEO of Sana Securities, joins us on the show. Good afternoon, Rajat. Happy New Year to you. How's the first day of the new year? What are you telling your clients to do?
Good afternoon. Happy New Year to you and all your viewers. I think the advice that we've sent out to our clients as part of our letter for at the end of last year was, this year you should be really cautious in terms of investing in some of the sectors which have done very well in past, particularly financials and private banks and IT. I do think that last year they were available at very attractive valuations, but now where markets are at these valuations, if there is a correction, these will actually be the sectors that will correct a lot from here. So I was just talking to a client to whom I said, invest if you're looking to invest for 3 to 5 years, and he said he's tired of hearing this 3 to 5 years long-term investing. I think the idea behind telling any client this is look for sectors and stocks which will do well from cycle to cycle of the market. So if markets fall now or if markets fall 1 year from now, there would be certain beaten down stocks and sectors right now which would have done well until then. So even post that fall, they will not be available at the levels at which you're getting them right now. So I think look for sectors where you see value. There are a lot of stocks in the market which for reasons beyond their control have fallen a lot, and they come from various sectors. Particularly, I like pharma a lot right now. I still like some smaller private banks. So that's where most of our equity-oriented investments are going.
I heard you speak of IT, make a cursory mention there. I was running a check right now with all the companies and all the big companies out there with their current price to earnings ratios, and I would compare them to the previous 2 year and the previous 5 year averages. What I found was that they were largely either in line or slightly below their averages. So are you suggesting the markets at this point in time are expecting some weakness, which is why they are assigning relatively lower price to earnings ratios for even some of the major IT companies? And I put this because we're starting to get in earnings for IT companies next week onwards.
Correct. No, you're right. So, I purchased Infosys at the beginning of last year at a time when it was available for 920 rupees, which was before, they did the bonus or the rights that they did. Now, if you look at Infosys in particular is a stock which I still hold in my portfolio. It's available at valuations of 17, I believe, right now, which is as cheap as you're going to get a stock like that with the kind of reserves and free cash flows that it has and the acquisitions that they can make. What I'm trying to say is that the way these stocks have run up in the last 1 year, despite not a similar kind of improvement in their earnings, it may just not come as a surprise if these stocks correct a little from here if the overall markets fall. That's typically what happens. If you have Infosys in your portfolio at a lower level, I mean, it's one of those stocks you can buy and hold in your portfolio, but don't expect this stock or any of the large cap IT stocks to perform as well as they did last year, at least this year, until there is some, improvement in earnings. And as you said, next week would be very interesting to see Infosys, TCS, some of the big guys who report their earnings and the guidance that they put forward. Because so far you've seen their guidance has been very muted all through last year. So let's see what they have to say this time around. I do expect earnings will improve more than they were improving last year, but that would still not justify the way the prices have run up. So I think they're valued exactly where they were, on their 5 year averages, but that's about right, I think. So in an overall expensive market, I don't think there is a compelling case of adding these stocks to your portfolio right now.
Okay, pull up, we're seeing that the bank nifty is up at the highest point of the day. It's up 1%, but I'm more interested in the PSU banking index. Pull that up. The Nifty bank is up, it's up 1.3%. And look at the counters that are leading the rally here. In fact, if you look at the FNO stocks that are gaining in trade, majority of them on the higher side are the PSU banking space. Bank of Baroda is up almost 3.5% at this point of time. The second gainer is Union Bank, which is up 3%. Indian Bank is up almost 3%. Oriental Bank. So the top four are public sector banks. Then there is Escorts, and then there is Canara Bank. So out of the top 6 FNO gainers, 5 belong to the PSU banking space. So there is enough traction that's happening. Rajat, are you recommending PSU banks to any of your clients at this point of time, or would you stick to the quality private sector banks?
No, so, not just at this point of time, I've never really recommended any PSU bank to any client ever. And the reason is simple, these stocks have fallen a lot in price. So sometimes, any little news that happens, whatever the government does to recapitalize them, they have this temporary run up. But no one really has ever addressed the systemic problem that these banks were facing, because of which the stock prices fell to where they are today, which is that they just cannot compete with private sector banks. Their service standard, the way they extend loans, their transparency levels, all of these concerns have never really been addressed. So yeah, from time to time, they may see some run up in prices based on some merger that happens in these banks, or some subsidy or recapitalization which the government does for these banks. I do like 2 private sector banks right now, and in general I like smaller private sector banks. So both these banks, one is Federal Bank and the other is IDFC First Bank. I think for IDFC, after the complete integration with Capital First, I do expect this bank to do really well. It's a very small bank, 14,000 crore market capitalization right now. I think these are the banks which can eat into the share of a lot of these PSU banks that you're talking about, because private sector banks have already created a very large market for themselves. Some of these smaller banks, the geographies in which they operate, IDFC particular in Western and Southern India, and Federal Bank as well. Because one thing you cannot deny is that for banking in India, the growth is there, the potential is immense for next many years to come. So I do expect some of these smaller banks, they're easy to understand, their balance sheets are easy to read. I'm hoping that at these levels you should add them and hold them for multi-years.
Okay, the Nifty is about the 10,900 mark in trade, strong recovery that's coming in on the Nifty, so there is enough traction that's happening on the counter. Rajat, what's your view on the auto space? What did you make of the auto sales numbers that have come out? I think apart from Escorts, which has managed to move up, all the others are down in trade because of disappointing numbers. What are you talking to your clients on the auto sales? Auto sector as such?
So, in auto, I think my view for the longest time has been, if you're buying some of these two-wheeler stocks in your portfolio, these are something you can pass on generation to generation, because the demand for these products will always be there in India. From time to time, if you're going to judge it on a 3 month, 6 month, 1 year kind of time horizon, of course, the numbers will look bad, the numbers will look good. But fundamentally, these are very strong sectors for India. I was looking at the numbers on your channel some time back, and there was some talk about the fact that the festive demand towards the end of this year, and the offers that they gave the car manufacturers and dealers towards the end of this year, and a lot of people wanting to buy a new model of car towards January this year would probably result in better numbers going forward once you have numbers for December and January out. So yes, these stocks could run up a little. One stock in this space which is very, very interesting, which I really like at these levels, is Tata Motors. This is your portfolio bet right now. Now, I know a lot of investors have recommended this time and again since a very high level. Today it's available at some 170, 172 rupees for reasons beyond my understanding. I mean, I don't get why the stock is trading where it's trading, because nothing is fundamentally so wrong. In fact, their operations in India are improving. There was some problem with JLR operations in UK and sales in China, but all of that is past. So I think whenever this stock does well, it could sort of do very well from where it is. And much as has been said many times before, I think the downside for this stock is really, really limited. At 171, if you were a portfolio buyer, this is definitely something you'll add to your portfolio.
Okay, well, we're going to take a look at some of these active stocks at this point in time, and I want to pull up Rupan Company. It's been a strong day of trade, there's no doubt about the fact, but the funny thing, and the thing that stands out for Rupan Company is that it's once again making a dash for levels last seen in the month of October. We have been talking about Rupan Company, and in comparison, the valuations with respect to it trades in relation to something like a Lux Industries, and of course Page Industries is 2 times, 3 times its current valuations. That said, the question really was whether or not Rupan Company can catch up. At this point in time, it certainly looks like it, but that's not from a fundamental point of view. I want to understand what's going on the charts. Amar, if I can come to you on Rupan Company. How are you seeing trade out here? What's going on out here? Is there more strength in store?
I would say, looking at this particular stock, I would say the stock continues to remain positive on the short term and the intermediate term trend. However, on the long term trend, what we are seeing is somewhere around 360, 365. That's a very strong zone of resistance for this particular stock. So there is going to be profit booking around those levels, and the stock will meet with selling pressure around 360, 365 levels. So ideally, one should look at booking profits around those levels, because the stock could correct from those levels. It's not going to find it easy to trade above and sustain above those levels. Only till the time we don't see a breach, a decisive breach above 365, 370 levels, the stock is likely to go in for some consolidation, because the downside also seems to be protected. The stock has now got very strong support at around 300 and 310 levels.
Yeah, and as we speak, State Bank of India is leading the rally again on the PSU banking index. State Bank of India has moved to the highest point of the day, so there is enough traction. Sacchitanand, what should someone do on SBI?
Well, I think the way this particular stock has been shaping up, we have already seen some decent consolidation within the range of 300 and 290. And again, if you look at some of the oscillators now, they are significantly placed in a zone wherein we could see momentum coming back into this particular stock. So probably what we are expecting is that this move can extend towards the 309, 310 zone. And I think from a momentum perspective play, I think 294 should be the stop loss for the trade.
All right. Well, on that note, it's time to take a look at what the dealing rooms are recommending. And as usual, we have Yatin Mota, who's joining us here to give us an idea on the same. Yatin, good afternoon. What do you have for us?
Afternoon, Agam, and of course, auto stocks are in focus today. Most of them have reported the numbers slightly on the weaker side. But Maruti is one stock wherein dealers do indicate that at higher levels there is some short selling which is seen in the counter. So watch out for this one. Has been volatile throughout the day with its own ups and downs, but marginally flat. Dealers do indicate there is short selling at higher levels, which is likely in auto stocks. Apart from that, watch out for Bank of Baroda. That is also one thing which is moving. In fact, today the PSU Bank index is quite active. So the likes of SBI, Bank of Baroda, everything is moving. Dealers do indicate a buy today, sell tomorrow kind of a strategy based on FNO trends. And finally, do watch out for Dabur also in the FMCG pack. Dealers do indicate that in select FMCG stocks, domestic funds are sellers in trade.
Okay, so we'll watch out for all these counters. Amar, anything that the market has managed to rally significantly? Anything that you spotted in the last 15-20 minutes of trade that you should buy as a momentum trade?
I would say one can look at Bharti Airtel because Bharti Airtel, what we are seeing is that the stock is in for some consolidation, and on the weekly charts also the stock continues to trade positive. So there is a possibility that the stock could witness a decent rally. The level to watch out, currently it's around 319, 320 levels. So once it breaches the 323 mark, ideally that can be a level to enter the stock, because then the stock can rally towards 334, 35 levels. And in that case, the stop loss needs to be below 314 levels.
Okay. Some amount of weakness seen in the likes of Hindalco. The reason why I want to pull up something like a Hindalco is because it's been volatile, but it did see some amount of strength yesterday. That's not coming through today, and it's down by as much as 1.5%. One of the top losers on the Nifty 50. Sacchitanand, if you can take this one up, how are you reading trends on Hindalco right now?
Well, the chart of Hindalco is clearly, suggesting it is range bound. In fact, 230 on the higher side, where its 200-day exponential moving average is placed, has been acting as a strong resistance. On the lower side, I think it has made a formidable base somewhere close to 210, 215. So we expect stock to continue within this particular range. But purely from a trading perspective, in case if I want to take a position, probably at this juncture, I would prefer going short in this particular counter as it is at the higher side of the range. So, clearly it is more of a consolidation, but if one wants to play within this particular consolidation, I think this is a good time to create some short positions.
Okay. What about Sacchitanand? Anything that you're spotting that that is interesting in the market? Anything on the long side that will be played as a momentum trade going into tomorrow?
Well, we have two stocks. One is Bajaj Finance, which we have already recommended to our clients. We are expecting that the stock has the potential to rally towards 2760 levels. The stop loss still can be deployed at around 2615, and long positions can be deployed in Bajaj Finance. It's a clear-cut flag breakout that we witnessed a couple of days back, and it is just an extended move of the same. The second stock that we are liking right now is Escorts. So we have already seen a good positive price action here. The OI additions are significant. We expect this particular move to extend towards this 200-day exponential moving average, which is placed somewhere close to 755. A stop loss can be placed at around 710.
Okay, well, I'm going to go back to Rajat, and I'm going to talk to him about NBFC since we are, in the space. So Rajat, on one hand, we have the likes of HDFC and Bajaj Finance, which are trading at very rich valuations, quite heady. On the other hand, relatively volatile, smaller cap names in housing finance and perhaps some microfinance, microcap, or rather microfinancing names as well. My question then is that how do you go about the space, and what would you do in the NBFC sector?
Yeah, so no, you're right. I mean, I think if you look at most of the NBFCs in financial services like HDFC and Bajaj Finance, Bajaj Finserv, all of those stocks are available, like are trading really, really expensive. And then, there is some, romantic liking for these stocks for most of the large fund houses, most of the large, fund managers, which is why you see these stocks keep rallying higher and higher. And it just does not justify why these stocks will be available at the kind of valuations at which they're available, and yet people keep buying them. So I've actually stayed away from a lot of these stocks, despite the fact that they've run up a lot, last year. Having said that, post the correction in housing finance companies, I think that sector looked really, really attractive, particularly Canfin Homes, and that's a stock that we've had in our portfolio. I've added more to a lot of my client portfolios. Also, what happened to DHFL last year, and then at the end of it, till date, everybody is really questioning what was that all about, because that stock has corrected so much for, again, reasons which nobody knows, and somebody's got to maybe I should do it. Somebody's going to do a detailed research and report and find out what really happened there. So a lot of housing finance stocks are looking that they're available at very good valuations, because again, that's a sector where the growth is not unquestionable. This sector will do really well going forward in India. So that's one sector where you could look at adding stocks. But a lot of these brokerage stocks, Motilal Oswal, Edelweiss, a lot of these stocks that ran up the way they did, a lot of Bajaj Finance, Bajaj Finserv kind of stocks, I'm actually staying away from these, because if markets correct, these stocks could correct a lot. I think I should say should correct a lot based on where they're available right now and the valuations at which they're trading.
Okay, Rajat, before we let you go, one final question. It's the first day of the new year, new calendar. In fact, what's the top pick that or top stock that you've recommended to all your clients that you should hold for 1 year, a 1 year holding period stock?
Yeah, actually, I tweeted about this yesterday as well. I think it had to be from pharma sector, and I think if there was just one stock, it's not really the best way to go about building a portfolio. But I think Sun Pharma as a stock, I wouldn't be surprised if it does really well this year, because first of all, pharma as a sector has been facing a lot of problems all through the last 1 or 2 years. In the US, concerns around the FDA, and in India, it had their own issues. Sun Pharma in particular, with all those corporate governance issues that came up, which the management and the con call clarified one by one about every issue that was raised, has corrected a lot. And I think last year, I believe it corrected 25% from the beginning of the year till the end of the year, and earnings have corrected about 12% on a year-on-year basis. So I think stock price has corrected far more than it should have. So I wouldn't be surprised if this year this stock does really well.
All right, Rajat, we'll leave it at that. Thanks a lot for joining us and taking us through your views on the markets, and once again, wish you a very happy new year. But with that, we move on, and while we have, to a certain extent, actually addressed Sacchitanand's closing strategies, I'm going to go ahead and quickly take a look at what Amar has to say about his closing calls. Amar, over to you. Anything that you find interesting right now?
I would say that I had spoken about this, but I would like to take this once again, and that is BPCL. BPCL is seeing a very, I would say, strong day today, and it's breaching out from its consolidation zone. And I would say that this is one stock one can definitely look at. So any pullback in BPCL can be used as a buying opportunity. The upside target is close to 384 levels, whereas the downside, the stock has very strong support below 350 levels.
Amar, is it the right time to start buying HDFC Bank?
Yeah, looking at HDFC Bank, if we see HDFC Bank, I would say the stock seems to be breaking out of a consolidation, because if you look for the last almost since 30th November, it has been trading in a consolidation zone, 2050 on the downside and 1050 on the upside. So it seems to be breaking that level, but I would say that one should rather wait for the day, because it needs to consistently close above 2150, 2160, then the stock has a potential to rally. However, on the long-term charts, the stock continues to remain extremely strong.
Okay, and Sacchitanand, what's your view on Escorts? Look at the counter, it's managed to move to the highest point of the day after a strong auto sales number. It's up almost 2.5%. What should one do on Escorts?
Well, we just discussed a trade. We are optimistic on escorts. We're expecting the stock to rally towards its 200-day exponential moving average, which is somewhere close to around 755. The stop loss for the trade can be placed at around 710.
Okay, well, let's come in on Dabur as well, because that's the other one which is losing out in trade, perhaps bucking the trend right now. And it's really under slight pressure considering a 2% decline out there when it comes to underlying. Amar, if you could tell me anything about the cues that you're reading when it comes to Dabur India. It's currently at around 420.21. What would you do with this one?
See, Dabur is clearly displaying bearish divergence on the charts, be it the weekly charts or the daily charts. That's the reason it's showing a loss of momentum. And also it continues to be a range play. So on the downside, 405, 410, that's a crucial zone of support. Whereas on the upside, 440, 450 is a zone of resistance. So the stock is now going into some consolidation, and the stock, ideally if the stock has to move up, then it should not breach the 390, 400 mark, because that's a short-term bottom which the stock had made in the first week of December. But the stock is likely to trade sideways, so better avoid right now.
Okay, pull up Prestige Estates, and that has shot up 10% suddenly. So I don't know what the news is, but nevertheless, there is traction that's seen on the counter. So it was trading strong, but the spike is coming in the last few minutes of trade. So there is traction that's happening on the counter. And the other few counters which I want to highlight is TCS has now moved into the green, Z Entertainment has moved into the green, and Adani Port has moved into the green. So all of them in fact are trading at the highest point of the day. So there is enough traction that's being seen on the counter. So strong day for the markets and a strong recovery that you were seeing. Amar, you gave your closing strategies, but I want to highlight anything interesting that you're spotting currently, because the market seems to be rallying. There are a lot of stocks that are moving around. So apart from your closing strategies which you gave, anything else that is catching your eye?
I would say then one can look at Reliance. Because what we are seeing in Reliance is that Reliance continues to consolidate, but with a positive bias. So it is, I would say, currently trading around 1120 odd levels. So the stock has a potential to rally, but confirmation will be above 1130 levels. So if that is taken out, then the stock has potential to rally towards 1160, 1170 levels. Whereas again on the downside, it has got crucial support coming around 1100. So ideally the stop loss needs to be below that 1100, and the buy only above is to be initiated above 1135 levels.
Okay, we are headed into the final minutes of trade to end for the first day of the new calendar year. Look at the move that's come in. The Nifty is up 50 points. We were trading down by almost 50 to 60 points. It's managed to move up by close to 0.5%. But the real star is the Nifty Bank. It's up almost 250 points. It's up over 1%. The Bank Nifty, especially the PSU banking stocks, are something that are rallying significantly in trade today. Nothing much on the mid-cap end of the market. The small-cap end of the market has managed to inch up close to 0.5%. Let's take a look at the stocks which have managed to move up in trade today. And surprisingly, it's Bharti Airtel which continues its good run for the second day in a row. It's up almost 2.5%. The HDFC Twins have actually lent a significant amount of muscle to the rally in trade today. Bharti Infratel is up in trade. SBI leading the rally as far as the PSU banking stocks are concerned. Some of the oil counters like an HPCL has managed to contribute. What has not done well, when Escorts is up almost 3 to 4% in trade. M&M, because of not the best of numbers that came out, is down in trade today. The metal stocks which rallied yesterday, Hindalco, JSW Steel, are down in trade. Even Tata Steel is down in trade. Indiabulls Housing Finance, yesterday's big winner, is down in trade today. And Wipro, Kotak Mahindra Bank and HCL Tech make up the stocks which actually dropped in today's trade. But among the other stocks and indices, let's go across to Agam.
Right, Darshan. So, well, needless to say that the broader markets have certainly done well, especially in the pickup that we've seen in the last half an hour or so. And among the stocks that I have picked up today, right at the top, I have something like a UCO Bank, because UCO Bank is doing well and it's closed at day's highs. But don't forget that UCO Bank actually had begun the day with a lot of strength, and it's closing well higher by as much as 12%. Kolte Patil is the other one, and you know, in fact, a whole host of real estate stocks stocks are doing very well in today's day of trade. Kolte Patil advancing by 9%, and the other one which is doing well is Prestige Estates from the same area. That is also up and about. This one has also gained nearly 9%, 8.5% to be precise, and it's likely to close near day's highs. JK Lakshmi stands out in trade considering the gains that we've seen, momentum building up with volumes coming through in the last, again, 1 hour of trade. That one is also up to around 7.5%. And Quest Corp, that's the other curious one. We've discussed this with our technical analysts, and they seem to suggest that somehow there is some positive momentum which is starting to build in Quest Corp. In fact, it's likely to end the day, and it has ended the day, with gains of nearly 6%. Also almost inching towards the mark of 700. Rupa and Company is the other very curious one. It has been surging, and again a lot of strength coming through in today's day of trade, up 5.5%. But on the losing end, we have something like a Mass Financial, and that's declined, bucking the trend, that's down 3.3%. Future Lifestyle is the other one, which has been, well, I would say very volatile over the previous couple of sessions. It's down 3.4% today. And McLeod Russell, contrary to what's happening with tea and tea prices, McLeod Russell declined by around 2.5%. So, well, these are just some of those losers in today's day of trade which bear down on the broader market indices. But, if we can have the contributors and take a look at which of those stocks which eventually took off and led to this 50-odd point gain on the Nifty. And you have HDFC Bank, ICICI and Infosys. But Darshan, I'm sure the turnovers must be on the lower end today, if we can have the turnover.
Yeah, the turnover will be on the lower end because, we don't have, it's better than what it was yesterday. Nevertheless, we've done some 5.5 lakh crore of NSE F&O turnover. That's something that's contributed, but absolutely very low contribution coming in from the BSE cash and then in NSE cash. That's the turnover. Pull up the advanced decline ratio, pull up the Nifty heat map, and we can come to see what exactly is happening. It's a day that's dominated bank. It's very interesting. Advanced decline turnover. It's been all over the place, but at the end, the gap did widen in terms of the advance. So almost 900 stocks are gaining for almost 600 that declined. If you can have the heat map, and you can clearly see while M&M was down in trade, it was a day of contrast. Escorts was at the day's high. Again, surprisingly, the Bharti twins contributed. It's been banks all day. The rally in the second half of trade was only on account of banks. Look at HDFC has a large weight on the banks. SBI has a large weight on the banking index and the Nifty. HDFC Bank has a large weight on the Nifty Bank. Axis Bank, ICICI Bank. The top row is dominated by banks, and you don't have, except for an SBI, you don't have any other PSU bank that's part of the Nifty index, and that is why the Nifty PSU banking index did extremely well. If you can pull up how the Nifty PSU bank index did, and the movers of trade, that will give a good picture. So the Nifty PSU bank was up almost 1.6%. If my producer can fire, the movement of individual PSU banking indices and the stocks there, we'll come to know what exactly happened, because counters like Bank of Baroda, you have your UCO Bank, you have your Indian Bank, Indian Overseas Bank, all these counters did manage to come up and close at the highest point of the day. This is because of the closing that happened, but look at the gain. Across the board gaining, I wouldn't consider IDBI Bank, but across the board gains anywhere between 1% to 4%. That's the strong move that's coming in on the PSU Bank stocks.
Absolutely, Wes, there you have it. A whole load of moves coming in from that particular sector. And with that, I'm going to head across to our technical experts for closing comments. So Sacchitanand, coming to you first. What's your closing comment, given the fact that we have ultimately landed up closing about 10,900 on the Nifty?
Well, at the beginning of the show, we discussed about our overall outlook. I think, the closing is very much in tandem to that. If you look at the overall construction of the indices right now, I think Bank Nifty is much more stronger than the Nifty. But if you look at the immediate trend, what we're expecting is that once the Nifty starts trading above, say, 10,970 in a day or so, probably we may see a very sharp rally coming into the market. So I think the closing has been really good, very much in line. Once we have a closing established above, say, 10,980, the base which has been placed somewhere close to 10,600 could move significantly higher towards, say, 10,800 or so. So I think the overall stance and the trajectory continues to be on the bullish side. We are expecting that this particular rally should continue right up to 11,120, 140 first. And probably, in case if we have enough steam, we may see an extended move towards 11,300. So we are expecting a very optimistic series.
Okay, and Amar, what about you? Your closing thoughts in terms of what we can expect going forward in January?
I would say that Nifty definitely continues to have a positive bias with higher tops and bottoms being formed, but till the time 10,970, 11,000 is not taken out, and it basically means is that this the index has to close above this mark, 11,000 mark consistently. Then we could say that yes, there is the possibility of the trend change being witnessed, because what we are seeing for the last many trading sessions is consolidation and choppy trading sessions. So it needs to close above that level. Technically, if I look at the charts, the short term and the intermediate term trend, they are positive, but I would say one of the long-term indicators are clearly indicating that it would really find it difficult to sustain at higher levels. But once 11,000 level is taken out, then we could see sell stops also getting triggered, and then the stock could witness the index could witness rally towards 11,200, 220 levels.
Right. Well, on that note, I'm going to thank both our experts, Sacchitanand and Amar, for joining us and taking us through their views on the markets. Once again, wishing them a very happy new year. And with that, it's a wrap in this edition of Countdown, but lots more lined up. Stay tuned to Bloomberg Quint, and we will bring you the day's wrap on the other side of this break. Stay tuned in.